Lenskart IPO Deep Dive, the billion-dollar vision play. When you think of eyewear in India, one name stands out: Lenskart. Founded in 2008, it has grown from a small online retailer to a tech-powered, vertically integrated eyewear giant. The company operates 2,723 stores globally, of which over 2,000 are in India. It's a true omni-channel player, blending its 100 million plus app downloads with a strong offline presence. Key acquisitions like Owndays and Dealscart have helped Lenskart expand its global reach. Its manufacturing bases and automated supply chain keep costs efficient. Technology is Lenskart's backbone, from AI-based frame design to virtual try-ons and data-led inventory control. The Indian organized eyewear market is worth around 13,280 crore rupees and expanding fast. Across all operating geographies, the market stands at around 232,400 crore rupees, offering massive headroom for expansion. Growth is powered by rising awareness of eye health, increasing screen time, fashion-oriented consumers, expanding middle-class income, and e-commerce adoption in smaller cities. The competition includes Titan Eye Plus, EssilorLuxottica, Warby Parker, and Specsavers. Among these, Lenskart leads India's market in technology, reach, and operational control. However, it faces typical retail risks. Lenskart's growth trajectory has been steady and strong. After years of reinvestment and expansion losses, FY25 marks a clear turnaround year. The company swung from a 63.8 crore rupee loss in FY23 to nearly 300 crore rupee profit by FY25 thanks to scale efficiencies, better cost control, and high utilization of new manufacturing facilities. Its return on capital employed, ROCE, improved to an estimated 35%, and cash conversion remains strong at around 80% plus. Looking ahead, Lenskart projects a 20 to 22% CAGR in revenue, with EBITDA margins rising to 15 to 17% and PAT margins to 10 to 12% by FY28. If those targets hold, net profit could double to 640 crore rupees. What makes Lenskart different from a typical retail brand is its funnel efficiency. With over 100 million app downloads, the brand has strong visibility. This funnels down to 29.5 million active users, 12.4 million paying customers globally, and over 27 million eyewear units sold last year. Retention is a key strength. The repeat rate in India stands at 3.6 times per 2 years, nearly double the industry average. Furthermore, the average payback period per store is just 10 months. Lenskart's IPO includes a fresh issue of 2,150 crore rupees and an offer for sale by existing shareholders. The fresh capital will be used for expanding company-owned stores, strengthening technology and cloud infrastructure, brand marketing, and potential acquisitions. The investment cycle is planned from FY26 to FY29. Before the IPO, major shareholders include founder CEO Piyush Bansal, TPG, Temasek, SoftBank, and others, along with a strong ESOP pool. After the IPO, institutional anchor demand is expected to remain high. 7. Valuation and pricing. Now the key question: is the IPO worth it? The FY25 earnings per share is 1 rupee 64. The IPO price band is 382 to 402 rupees per share. That translates to a P/E ratio of approximately 245 times. To compare, Titan Eye Plus trades around 88 times, Warby Parker around 71 times, and global leaders like EssilorLuxottica trade near 36 times. So, Lenskart's valuation is 2.5 to 5 times higher than peers. Based on peer valuations, the fair value comes to 99 to 148 rupees per share for FY25 and 213 to 319 per share for FY28. This means investors are paying today's 402 rupee price for future dominance, not current fundamentals. While the story is strong, the risks are real. First, operational risk. Managing over 2,700 stores is complex. Second, supply chain risk. Third, integration risk from merging acquisitions. And finally, valuation risk. At 250 times earnings, any earnings miss could trigger a sharp correction. The company's strengths are its strong brand, tech-led omni-channel model, deep customer loyalty, and growing global presence. The weaknesses are the clear overvaluation and high reliance on imports. Threats include a macro slowdown, regulatory challenges, and aggressive new entrants. Lenskart's leadership is one of its biggest assets. Piyush Bansal is known for operational discipline and tech-first thinking. The board includes global private equity veterans, ensuring a strong governance framework. Manufacturing is a key strength, with nearly 70% of prescription eyewear made in-house. Over 530 engineers work on AI-based systems, and the retail strategy is highly efficient, with stores breaking even in just 10 months. Investor enthusiasm is high. The grey market premium suggests strong listing expectations, and institutional demand is high. However, post-listing volatility is likely, especially if early investors take profits. Here's the crux: at 382 to 402 rupees, the IPO is expensive. On fundamentals alone, the fair value sits much lower. This is a play on India's rising consumer tech wave, not just eyewear. The IPO opens October 31st. The mood is optimistic but very aware of the overvaluation. Retail subscription is expected to be high, as the market views Lenskart as India's next Titan-style consumer tech story. Lenskart's IPO represents India's new age retail evolution where data, design, and digital seamlessly merge. It's one of the few Indian startups to achieve scale, profitability, and international expansion before listing. But make no mistake, the valuation is stretched. The market is betting not on what Lenskart is today, but on what it could become in the next 5 years: a global eyewear powerhouse. For long-term investors with high-risk appetite, it's a potential multi-year compounder. For value seekers, patience may pay off post-listing. In short, a visionary company, with ambitious pricing. For long-term investors with high-risk appetite, it's a potential multi-year compounder. For value seekers, patience may pay off post-listing. In short, a visionary company, with ambitious pricing.